Welcome to Founders Future, a podcast by Closers.io, where we dive into the journeys of innovative entrepreneurs and explore the road ahead for them and their companies. I'm your host, Samuel Kanzam, and in each episode, we'll uncover the stories behind successful startups, the challenges faced along the way, and the strategies driving their future expansion. Today, we're excited to have Nate Houghton, the founder and CEO of Incendium, where they connect clients with innovative solutions and generate sustainable demand for their clients. Nate will be sharing more about his founding story, as well as giving us a glimpse into his plans for future growth. So let's jump right in. Nate, welcome to Founders Future.
Thanks for having me, Samuel.
Of course. Take us back to the beginning. What did this process look like, and what problems in the marketplace did you see that led you to becoming an entrepreneur yourself?
Yeah, it's a good question. I've started a few companies and organizations, some much more successful than others. I think in the unsuccessful instances, I had an idea of my own that I would try to push into the market, and I think the times where things worked, Incendium being probably the prime example, the market itself kind of pulled us to our growth. So I met my co-founder Adam in it would have been late 2016. He and I got coffee in Washington, D.C. And we were both working with some early stage companies. We thought that too many of them were focused on the wrong things at the early stage, and that most of them would do better if they just got out into the market and tried to sell and iterated very quickly based on what they learned, not an unfamiliar story. And so we threw together an LLC and started working with some clients. So there was no point at which we sat down and we're like, this is what we're going to build. We're going to go raise money. We never raised money. There's nothing of that nature. And for probably 4 years, or I guess really until the pandemic, so like early 2017, through 2020, we probably had two or three clients at a time. We were both doing other things, running sales for different startups. I worked in VC for a time, et cetera. And we would just have a couple clients on the side because we like doing it. We liked helping founders, B2B founders figure out their growth challenges. And over the course of that period of time, we started to do more and more cold email. And I think this was a bit of a different era for cold email, and we got good at it. And I think other people heard that we were good at it. And so when the pandemic hit and companies couldn't go to conferences anymore, they a lot of them came and asked us to do cold email. And that was, about a year after that, I had to make a call of whether it would really become my job. And so I think that in some senses, our real founding and kind of taking this very seriously was more like January 2021. So that's where Incendium came from and how we evolved over time.
Gotcha. And for you, obviously, it sounds like you've had a number of other endeavors that started, maybe weren't exactly what we thought they were going to be inevitably, but how did those experiences end up driving you in this specific position? What did we learn as a byproduct of those endeavors?
Sure, yeah, and I think the most prominent, I started and shut down a startup in 20, I guess right before Incendium. So I tried to do a real estate tech startup um, called Growth IQ. Obviously, very difficult experience to kind of start a company, not be able to raise money, have to shut it down. I would say probably the biggest thing that definitely persists today is most of the people who I work with day to day are founders. And is a really unique kind of person who does this sort of thing. And having seen effectively kind of the worst outcome and being able to speak to that with them, I definitely think that's something that informs me when I'm thinking about what other things are going on in their head when they're in a meeting with me about their growth, because they're definitely thinking about a million other things. And I think the other thing I would just mention is like it's not that bad. It's not the end of the world. Like I think that I remember being somewhat startled in a very good way that, well, this is it. You just kind of, do the next thing and it's fine. And I think a lot of founders would say the same thing. But for me, it was definitely an informative experience to go through that.
Walk us through. It sounds like your initial traction was really on the cold email side of
Yeah.
things. How has that changed over the last couple of years as far as what you currently offer to your clients, and how has that offer expanded over time?
Yeah, it's a good question because certainly cold email is still the most important thing that we do. That has less to do with our capabilities and more to do with the fact that strategically, we still believe that for a very early stage, pre-seed, seed stage B2B company, it is the first thing that you should do. It's not the only thing you're ever going to do. It's not necessarily even the most effective over the long run. But from a quick ROI perspective and doing a lot of testing in the market and just trying to take people from they have no idea you exist to considering your product, we find it very hard to beat. You don't need to scale up a sales team who calls people. You don't need to buy any ads. You don't need to be very good at content. You can just kind of get going. And so I think that it had more to do with it being the best prescription, I suppose, for a lot of the companies that we work with. And so we continue to focus on that. Obviously, to grow as a company, we've had a couple of iterative cycles around, what other things they might want us to do. And like any company that survives for long, and if you have enough clients who are very happy with you, that they want you to do more other things. I think the menu for B2B growth isn't that long. There's not that many things you can do. We've never really gotten into the calling game. I think that's often a really hard one to get right. Not impossible, but a really hard one to get right. And it's just not like a human capital play that I wanted to make. But we certainly have learned a lot about LinkedIn, both content and messaging. We've done some retargeting with some of the leads that we're producing through email. We've gotten into long form content as well, as I think that that's often a nice complement to the work that you're doing with outbound. But a lot of it is still based around this hub of doing outbound as the first step.
Gotcha. And what channels have you noticed specifically for Incendium have really performed the best when it comes to client acquisition for yourself? Is it the same type of cold outreach processes that you're using for your clients primarily, or are there other channels you're noticing are tending to perform best for you guys?
I mean, I think the first thing I would say is that a big shift since we started Incendium, and I think this is a relatively recent shift over the last 3 to 5 years, is I don't see very many single channel wins anymore. And so when I get a question about channels, the answer is usually more than one now. And I actually do think that's relatively recent. I think that B2B growth was probably simpler in the 2015, 2017, 2019 kind of range. I did talk to a lot of companies then that would say, hey, we just really hammer the conferences and we do great. We pick up leads, we win there. We really just do a lot of cold email. More and more, I'm seeing now that you engage someone with an email, they end up on your newsletter, they see something you post on LinkedIn, you run into them at a conference, and like how you attribute that is sort of up to you. So I think that we're like a lot of our customers in the way that that's definitely true. Where we're unlike a lot of our customers, particularly those that are software companies, is anytime you have a services business, as much as we try to productize it, and we can talk about how we're doing that later, but anytime you have a services business, you do have a bit of like a personal connection and reputation, which lends itself to referrals, to warm introductions, to, network type stuff. Every business, I think, starts there. And I think, founders kind of use their network that way. I think that more scalable businesses like software tend to graduate from that a little bit quicker to other channels that work. We do have others working. We do a lot of outbound and we set meetings that way. And we do, we support that with content, both live content, written content, mostly on LinkedIn. In our case, we focus on LinkedIn, but definitely more than 50% of my leads, maybe right around 50% of my leads still come from people telling their friends somewhere, whether it's, another founder. And I'm okay with that. I think for the nature of the business that I run, that's always going to be the case. But we do have a really nice, robust structure for a company of our size, driving in the 55 to 60 meetings per month range and closing a healthy proportion of that. So I think we can't attribute all of them directly to one thing, but it's definitely some combination of referrals, outbound, and content on LinkedIn.
And it's also very clear that ultimately in any business, word of mouth and referrals is always the byproduct of a quality product,
That's
especially
true. Yeah, that's true.
for you guys. It sounds like obviously ballpark 60 meetings per month coming in as a byproduct of that. What does that sales process look like typically? Is that someone that we have already delegated that and we're expanding on a team front, or is that something that the founders are still involved in themselves?
A little of both at this point. So we are getting to the place where I'm not closing every deal, right? Which is important. We don't have we don't really have any sales process that goes beyond 2 calls. And the majority of them are just one. So it tends to be pretty quick in that sense. The one thing I will say is that a lot of our warm outreach that we do, to maybe people you're already connected to on LinkedIn, those are meetings that are effectively sales meetings because that's where you hope they go. About half of them, I think last month it might have been 42% of them were dead on arrival. And that doesn't mean it wasn't a good conversation. It just means that like I was catching up with someone and it was clear like I couldn't be like, so by the way, do you want to buy something from me? And that's fine. And I think we do the math on that and we're okay with some proportion just because there's also a proportion that's like, well, tell me what you've been up to. And like, oh, you know what? I actually would like to hear more about that. Enough of them that it makes sense. So I answer your question that way by saying that I think that probably the thing that's been hardest, and we are making really good progress in this, but the thing that's been hardest about moving from founder-led sales is the ability or the capacity to make that kind of pirouette in the conversation where it's like, yeah, I'd be happy to tell you about that, or like get them to ask you what you're doing. And I'm really lucky to have some people on the team who've learned that, which is kind of impressive. But I think a lot of people who don't move beyond founder-led sales, that team seems to be the sticking point. It's like a founder seems to be able to do this catch up in a way that like you can kind of turn into a pitch in a very organic manner that other people seem to struggle with.
Yeah, no one can perform quite like the owner themselves, typically.
No, and I think that's fine. And I know that some people, and I don't think it's necessarily a bad thing, we'll tend to try to break down the process so that like maybe the first call's with somebody else, whatever, like maybe they bring in the founder to close. We maybe do a little bit of that. But I also think that we just have such a quick, it's a pretty off the shelf offering at this point in terms of what we sell that we don't really need that many calls.
Sure. I'm curious as well for where you guys are at in the business, what do you notice is the current bottleneck as far as continued growth? Is it more relating to like the lead generation side of things, the sales process, fulfillment, capacity, or is it something?
Mhm. Yeah, so I actually I'll broaden the scope a little bit on this. So I told you the first half of the story of how Incendium got started. The second half of the story is probably more interesting because from January 2021 through really the beginning of 2024, we grew pretty aggressively for a bootstrapped company. Something in the neighborhood of 10x, which was really fast, and I think we got our revenue up. And it was great. I think in some ways, like we achieved a lot of goals. We made, the Inc. 5000 list. We went through a partial acquisition. We were able to cash out some of the ownership, all that good stuff, which was very exciting. The bad part was that growth was in a really unsustainable way in the sense that I was really account managing pretty much all of the clients. And so if you had asked me a year and a half ago, what's your bottleneck? Like they all needed to talk to me and I was effectively solving growth problems for them. We were charging, six, eight, $10,000 a month on a retainer to solve growth problems. We were doing outbound, but we were surrounding that with just a really heavy amount of consulting work to try to help them grow. And that created a degree of responsibility that I don't think was feasible and kind of got us in a bad spot. We basically spent 2024 deconstructing that and saying we need a better model. We need something that will scale a lot better. And what we came up with was this Sonar offering. And so Sonar is effectively a productized version of outbound. I think in parallel, we were going through a period of time where outbound's effectiveness as a direct response channel was diminishing. We were not seeing responses anymore. And so we repurposed it to be more of an advertising channel. The upshot of that for us is that we now have something that I can sell a lot cheaper. It's like $1,000 a month, right? That's a really different economics in the business, but I don't need to be involved in every one of those all the time. And I think that means that, we can get to 100 or 200 or even 1,000 of those sold with no real barriers. We just need to kind of staff up some very simple things that can get done to do the outbound for people.
Mhm.
So all that is to say that I actually think as we sit here, middle of March here in 2025, we're in a really nice place scaling up. We've been doing this Sonar offering as the primary for about maybe a quarter and a half, and it's really starting to accelerate, which is interesting to see. I think for us, the question is always going to be, what is the natural rate of meetings that we can drive? What's the natural rate of close? What's the natural rate of churn on the other side? So far, all those numbers look very, very healthy, and I think give us perspective that we can get into ideally the hundreds of these, by the end of this year. But I don't think we have as much of an operational bottleneck as we did before. It's really just a matter of going back to the well and almost like starting a new company again with a totally different offering, which has its own disadvantages as well.
Yeah, it's only trade-offs on either direction. Obviously, one
Right.
of them is higher retainer, but you are kind of the key bottleneck at any given point in time.
It's a little like a sports team that like maybe won a championship 3 years ago, and now their stars are like aging, and they're like, we can try to extend this window, like we can keep it, but at some point the bill is going to come due, and like we're over the salary cap, and like we need to tear this thing down. And 2024 was very much us being like very deliberately, we have to tear this thing down. We need to start a new one. And I think now we're back on the upswing of it. So we kind of did the hard part there, and I see some good visibility to growth.
As we look forward over the course of the next really year, so 6 months, 12 months, what are you placing as your top priorities as you continue to expand?
I think that because we figured out the operations of this thing and we've made it work and we have a really good handle on the tooling and the market, and I think we have our finger on the pulse of what's working well in outbound. I think the messaging makes sense. Our processes are good. We have good top of funnel. So what we're really focusing on is now bringing back this idea of outstanding customer service, which you alluded to earlier, so that people see how hard you're working. And I think what we're finding is that we got afraid of that a little bit over time because when you're an agency model, really good customer service quickly slips to scope creep. It's like, yeah, I can do that. Yeah, I can do that. Yeah, I can do that. And I talk to a lot of agency founders who have this issue. And so part of our idea of being like an anti-agency is we can modularize all those things, but we can surround that with this idea of being helpful, in a time box manner. So I would say that that's one thing over the last several months that we've really emphasized. And I think we're finding that this sort of low cost modularized offering that gets the job done and does exactly as it's promised, done by people who are consistently saying like, hey, can we be helpful here? Here's an idea for you. Maybe we could do this. That tends to be useful. So I think the customer service piece, but our values are creativity, consistency, customer service. And so we think about those three things as much as we can. I think we win in those areas for the most part.
And I know with your current service packages, you do have other components as well, right?
Mhm.
Are you noticing that those are, clients who have been long term with you who are just looking for that additional level of service, but instead of having it be a scope creep, it's now an extension of the current workload? Is
Yeah,
that
that,
what
that's it's some combination. We do have some clients who are doing other services with us who are not Sonar customers. We have others that are Sonar customers having us say retarget ads to the people who are hot leads from Sonar, and as an example. So it's a little bit of both. And I think that yeah, one part of that rebuilding teardown I was talking about was like, how do we figure this out instead of saying you're paying me a retainer, I'll do whatever you want. It's hey, how do we price these different things? How do we put them into market? And I think we've done a better job of that. Our business is about 80% this Sonar offering. I would expect that to maybe even increase a little bit. I think like 85, 90% is probably where we are. But we do like to be able to be there to do some of the things that a client might need us to do if they're happy with our work and and we're on the activity metric side. By that I mean like we're doing the things that we said we're going to do. We're definitely trying our best. We're performing very well. I think where we don't want to get into is a place where they're like, how much revenue am I getting from you? Because I don't own the company and there's just not that much I can do there, but we can definitely be as helpful as possible and always work as hard as we can. And that's something I think even the clients, in fact, I know almost every client who ever fires us is like, there's a market thing here. It's the performance might not have been there, or even we actually messed up, but it was all well intentioned. And I think those are the types of things that if you are doing that, you can sell these other services because people will trust you to give it your best effort.
Absolutely. A couple more questions before we wrap up here. For you specifically and personally, what's the best piece of advice you've ever received when it comes to the world of entrepreneurship and really business as a whole?
The best piece of advice. A good one is if you want advice, ask for money. If you want money, ask for advice. That's a pretty good fundraising and sales tactic, I think. So that one tends to be helpful. And then I think I touched on this, but one thing I wanted to make sure to talk about, my team knows this really well too, is I think one of the paradigms that I tend to think through is activity metrics and performance metrics. So it's like, is this something that, is in your job description that you have 100% control over? Like, did you send the follow-up email? The performance metric would be like, did it close? And I think we are anytime we're in a growth category, like thinking through, is this something we could have controlled? And then there's some variability in the outcome, which you can live with, or is this something where you just didn't do your job? And I think we tend to get better outcomes when we just focus on the things that we can't control.
So really understanding both the leading and lagging indicators and understanding that as long as the inputs are coming in, regardless of the outcome, we're controlling what we can control.
Well, if you continue to do the same inputs and the outcomes are bad, then you have a strategic issue, right? So like if I have a team of people who are constantly doing what I'm asking them to do and we're just not seeing the results, like we need to rethink the strategy versus, hey, you're not showing up to work. And like that's a very different issue. It just helps identify problems, I think, at the right level.
Absolutely. And final question for you. Would that be the same advice you'd give to someone who is just branching into entrepreneurship for themselves for the first time, or would you vary that advice in any way, shape, or form?
I think the activity metrics, performance metrics piece holds, whether it's holding yourself accountable. Actually, I'll put it, that's a very good question. I would say for activity metrics, performance metrics, it gives you a little bit of grace. If you're working on your own, you're like, I did my best here. I did everything I was supposed to do. The results weren't what I wanted. I can live with that. When it's a management tactic, right, and you actually have people who are working for you, I think it's much more of a diagnostic. But yeah, the money advice one, I think applies to almost everybody all the time. So yeah, I think that one's pretty fair.
Awesome. Well, Nate, I want to thank you for joining this episode of Founders Future. To all of our listeners, if you've enjoyed this episode, don't forget to subscribe wherever you listen to your favorite podcasts. You can also find more resources and insights at closers.io, where we're designated to help people accelerate their sales and marketing, specifically through sales trained appointment setters, closers, and world-class marketing systems. Until then, keep climbing, and we'll see you in the next episode.